Hi everyone. Today let's take a quick look at the PPI. Came in much hotter than expected and definitely drove down markets today. Then we'll take a quick look at all the data and the charts before we get into the longer term charts on the Sunday video. Go ahead and like and subscribe and hit the bell, and let's get into the video. So like I said, PPI came in hot, much higher than expected, and that drove up rates. You can see all of the interest rates were up on the day, and you can see here it went up 0.3. We were expecting a 0.2. Definitely not great. And core PPI increased 0.5, also much higher than expectations. We were only looking at 0.1 for expectations, so a massive jump there. Everything for PPI was much higher, and this is on the back of a hot CPI number. So it seems like we're starting to see some inflationary pressures here. I think this is going to be interesting going forward. Two hot readings in a row, definitely going to put pressure on the Fed to continue to keep rates higher, which I think is going to put pressure on the equity markets as we push forward into the middle of this year. Otherwise, looking at fear and greed, still very high here at 78. Looking at momentum and strength, continuing to stay in extreme greed. Breadth still holding in regular greed. Put call ratio in extreme greed. We'll take a look at that on the Sunday video. And then VIX still holding at that same level it was at yesterday. Still seems to be trending up. It's still above the 50 SMA. And then the longer term debt markets still holding in extreme greed, as well as junk bond demand still in extreme greed. Markets are still very optimistic despite the new inflation data. Moving over to seasonality here just for a moment, you can see it is expected to stay generally flat for the NASDAQ. Russell oscillates a lot, but basically flat from current levels. You can see we're at the 16th, so maybe we see a little bit of a rise into the Monday, and then it is expected to be quite bearish the following week. We've seen that multiple times on the charts at this point. So we got the rally into expiration. It was down a little bit today, but then next week is significantly more bearish. So we'll see how that plays out. Moving over to the economic calendar here just for a moment, you can see those PPI numbers, 0.5 versus the 0.1 expected on core. And then you got the headline number here, 0.3 versus 0.1. So much higher than expectations. The previous read was revised down, which is a little bit bullish, but doesn't compensate for that big step up on core, in my opinion. And then Michigan numbers, all of the inflation data here was higher than expected. Consumer sentiment continues to stay quite high, as well as consumer expectations, but that inflation data on the back of CPI is quite bearish, in my opinion. Moving over to max pain, you can see we finished just below that 500 number. 485 was max pain for the Friday session. Total options, lots there at 4.4 million. And then looking at the strikes, 495 was what I was watching. We ended up finishing much higher than that. Pretty surprising. Really just slightly below the top of that first put strike at 500. So a little bit of a dip, not the top of the puts. So a little bit weaker on the finish, but not as weak as I would have expected based on how strong these call walls were going into the week. Moving over to the charts, you can see we dipped really hard on the PPI data, tried to rally mid-session, and then sold off into the end of the day. We're right at that support level here, 498.64. Got the 144 EMA on the hourly chart sitting at 498.65. So right there, critical point going into the Tuesday session. Remember, Monday is a holiday. I would expect this to break down to that 495.37 level, right at that 200 SMA on the hourly. That's where we sold off to last time on CPI, ended up bouncing from that level. Looks like we're getting a double top. Then we'll see if we hit this level here. Like I said, 495. And then if this midpoint breaks, then you have a clear double top and a breakdown. That's going to be quite bearish. And then looking at it here on the daily chart, you can see we're down about 0.5%. Didn't fully engulf, but we did if you include the after hours pricing. Momentum step towards bearish. We haven't seen that in a long time. Going back here to 19 January and a step into higher bearish territory we haven't seen since the 16th of January. So bearish momentum, RSI clearly breaking down. And I would expect that follow through next week, especially based on seasonality, like I mentioned. Moving over to the NASDAQ, quite a bit more bearish. You can see we tried to gap up, hit that highly traded zone, fell super strong down to the 200 on the hourly chart, hit the 21, broke down from that level. So that looks quite bearish. Big bearish momentum, bearish RSI here on the hourly chart. Daily chart, still bullish in terms of structure, still above that 21 EMA, sitting at 427.80. Momentum, bearish, RSI, bearish, even more so. Volume stepping up there. Looks like a lower high setup, not even a double top like we saw on the S&Ps. So looks significantly more bearish here on the NASDAQ. If that 21 breaks along with that 428.50 level, then this is going to look a lot more bearish. You do have some trend support down around 425, which is interesting. You could also maybe argue left shoulder head, bottom out around this level, right shoulder, and then we see a bigger breakdown, certainly possible. Just keeping the options open, but right now this does look significantly more bearish with that lower high setup and a breakdown. Moving over to the Russell and the Dow, you can see the Russell actually held up pretty well, down 1.36%. Inside candle, it's below the trend line, so that's not great, but it's still holding at the same level, right in that 101, 201.88 area. It's down a little bit after hours, so it is technically below it. Next support would be 198.75. Momentum still bullish, RSI kind of choppy, but above the 50 line, so definitely consolidation. We didn't get the breakout here like we thought that we might off of that big move on Thursday. Obviously, PPI put a damper on that. And then similarly here on the Dow, retested that trend line, broke down from there. And we were down already going into the PPI, and then you can see it fell all throughout the session after retesting that 387.77 level. So definitely looks like a top or a lower high, and now you're looking at the midpoint. If 382.20 breaks, then you're going to be looking for much more downside here in the Dow. Moving over to Apple and Tesla. Apple was down 0.84, tested that level at 182.37, and the trend line once again still holding that area. That is a second test of the trend line. We hit it yesterday as well as that level yesterday. We're still getting follow through. Really needs to hold that level. Otherwise, 178.58 is the next level to the downside. Momentum bearish, RSI is still bearish. I thought the news about their AI competitor might give them a bit of a boost, but right now this looks bearish, breaking below multiple levels, just waiting for that last trend line to break here. And then looking at Tesla, strong day yesterday, did break down a little bit, still holding 197.75 right now. That's the stop. If that breaks, then you're looking for 188.50, and then as long as it holds, still looking for that 144 EMA at 210.59, or potentially even all the way up at 214. Moving over to staples and discretionary, staples was up on the day, 0.15, so it's still holding that 72.50 level. Tested it on Wednesday, gapped higher yesterday and held. Tested the trend line, so that's not great. Got a little bit of a rejection from there. Still need to see it get above that and that 74 level. Still in no man's land here for staples. Discretionaries, inside candle, rejecting off that 180.10 level. Momentum starting to fade a little bit. RSI still holding above the SMA, looks a little bit weak. Kind of looks like everything else, right? So we looked kind of bullish going into the day. Now it looks like consolidation after we rejected from those highs once again. The same high that we touched on Monday of last week, touched it again on Thursday of this week, and looks like we're getting another rejection. And on the medium time frame, you have a high here from mid-December and a lower high here from February. Moving over to breadth, we did end up getting a rejection from that 55 EMA. We talked about being right on top of it yesterday. We also tested it on Monday the 12th, and now we've broken down both times after touching it. Definitely in consolidation here on the 20-day average, continuing to hit those same highs and reject. You would expect this to follow through potentially down to that 36 level. Each of these lows has been even lower, so got the rally through, first low, second low, third low. If this follows through on that trend, you'd get to that 36.60 level. And then similarly here on the 50-day average, we got another lower high off this previous high, hit that 62.25 level, rejected from there. You would expect a lower low here as well, below 52.80, and if it pushes down to 40, that could be quite interesting. That was a critical turning point on this previous move, and that's what I'm looking for right now on the 50-day average for Brett. Moving over to the 2-year and the 10-year yield, both of these popped up as you would expect. We looked at it yesterday and we thought that it was going to go higher, but it did pop up on the PPI news as well. Got all the way up to the 200 SMA here on the 2-year, 10-year wicking that trend line as well as the 144 EMA. Both of these look bullish. We didn't get a bullish momentum here on the 10-year, but I would expect that to follow through up to that 4.35 area. And as long as yields continue to look bullish, that's going to be bearish for equities over the medium term. Moving over to the VIX, we did end up getting a test of that 9 EMA on a wick low, and then we bounced from that trend line and rallied up. Got to the same level, 1470. I would expect this to have follow through on the Tuesday and Wednesday sessions, giving you a potential spike into that 18 to 1850 area over the next few days. Remember, next week is expected to be quite bearish on the seasonality charts, and you can see we did hit that SMA and bounce from there as well, again indicating more bullishness to come on the VIX. Didn't see a step on momentum, which is interesting, but all of the other indicators are quite bullish here. Moving over to my accounts, I did not make any changes here today. Says I was down on the day, but I'm still deep in the money on all of my calls. You can see 194 here on the IWM. It is a long time from now, so it's not going to move exactly with the shares, so do have to be patient there, but 194 is my strike. Then I have $13.50 credit on that, so that would put the break even down around that 180 level. So plenty of protection here on the IWM. And then looking at the TQQs, no changes here either. 187 call for next week, made a little bit of money on that. Still in the money, 57.41, and then I got $2.84 credit on it, so still doing fine there. And then looking at the 53 calls, again, deep in the money, 53. My max profit here is 58.37, so we did dip below my max profit a little bit, but as long as we continue to hang out above that 53 level, I am considering dropping this position down to 2 covered calls on the triple Qs, which would drop my share position to around $86,000, and I still wouldn't have to use any leverage for that. You can see I'm at 91,000 now with the money that I added here today. I just think we're going to see more bearishness, and I don't need to hold this large position. Even with the covered calls protecting me down to 83, I do think I'm just a little bit over levered here. My notional value right now at 900 shares at this price is closer to 160,000. I think I want to cut that in half. I just think I'm a little bit over levered here going into some potential bearishness. I'll be watching the markets pretty closely on that morning of Tuesday to potentially make that adjustment. I would still position myself in a very similar position on a deep in the money covered call, so I wouldn't change my overall thesis. I just want to drop it down in terms of value in the markets. We'll see how it plays out going into the Tuesday session, but that's my current idea for a potential adjustment here. Let me know down in the comment section what you think of inflation and its resurgence here recently. Is it going to tank markets, or is this just a data blip here in the short term? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.